Hi all, good morning.
Good morning, sir.
How are you?
Good.
Okay, thanks for joining the call. Myself Shiva. So I am having 15 plus years of experience in SAP. Even I have a strong domain experience. Last 6 years I am in training industry. I have done completed multiple projects, implementation, support, rollout, migration projects, as well as I have completed around 10 batches of FICO. So this is first batch in 2026. Okay, and now coming to the CO. So let's. I think everyone is like CO means it's basically who are working on finance or who is having knowledge or taken a training on finance. Then only so learning of CO is good. Otherwise, it's very difficult to understand because it's closely integrated with the FI. Without finance organization structure, without organization postings, primary postings, so there is no concept of controlling module. Let's move on one by one. First, we can put in a presentation mode. Okay, this is our organization, Confident IT Solutions, which is located in Victoria Memorial Metro Station, which is connectivity very walkable distance from metro station to institute. You can join offline and online classes,
Sir,
and you can.
have you shared anything? So it's not visible.
I did not share the screen. Let
No.
me let me reshare again. No.
Yeah, now it's fine.
Okay. Yeah, our institute is the Confident IT Solutions, which is located in Victoria Memorial, railway metro station. It is walkable distance from metro stations to institute, Green Hills Colony. You can contact me on 830-924-9613. So basically that FI and CO both the modules, and not only FI CO. I am basically me and Aditya will look into that FI and CO, and coming to other modules, the functional modules, which is covered by our colleagues and those are all expertise, industry experience. Okay. So now today we are going to discuss about controlling module. Here you can find that list of content, what are the module is going to cover. So basically before, even though you may be taken training from other institute from that FI point of view, or you are already working professional in a FI, then it's a good time to learn that CO module because so there is a huge demand for FI and as well as use supply also, right? So there is a competition is heavy in financial accounting. Comparatively, CO module, yes, definitely CO is a some kind of gray area, means you may not get any colleague in the same project because mostly so the resource allocation will be one or two resources in each project for CO side. CO means controlling module, we can call it as. Finance perspective, we may see, multiple people are working in a finance SAP FI module, but CO module hardly, maximum one, or sometimes you may be two people also. So that is the reason people are feel fear about, like, oh my god, no one is there to guide, no one is there to support, no one is there to, if I am not there, if I don't know something, then no one will guide. So I don't want to go with the CO. People are, even they learned CO also, they are moving back to FI, because that is an happening for industry, because people who is having, like, who is passionate, right? So we want to take a challenge. FI is a routine work, means it is like, even you will get the information from the Google or your colleague, your friend. But CO is like, project to project, it's a different. So that is the reason people are feel fear. But nothing is there like that. Real situation is not the same which people are speaking about. CO is a typical module. Okay, if you learned properly, but definitely if you are not taken the proper training, if you are not practiced in a proper way, then it is really difficult, very difficult module, because understanding and it's a conceptual analysis is important. Okay, so who is eligible here also, in as as we discussed in finance, and here also there is no age restrictions. Why we need to learn CO? Already I am an FI expert. You, if you are really, expertise, you are working in a real industry, so then you might aware about that what is the demand for the controlling module. Comparatively salary is also high, you have a negotiation power, even existing organization or moving to other organization, you have a salary bargaining or negotiation power. Comparatively other modules, it's an high. So payment also high, because controlling module, when you are putting you in your resume as a CO consultant, you are also as a FI consultant, right? So there is no question about, oh my god, I am a CO consultant, why you are asking me is do for FI? No, it's a an add or additional thing, that is a CO module, means you have already FI capable. Okay, so that is the reason you have a bargaining power in sales, salary negotiation, or even you have a demand for this product, less supply, less requirement, but competition is low. Sustainability also, it's a good. What is the sustainability? If you are placing somewhere in the project, so when new person come into organization, the people are looking for, like, hey, this guy is having experience or not. So means finance, you have multiple people, so they know the subject, they will cross check you, like, can you please tell me about this, I am not clear, that kind of question will come into picture. But in CO, even they are asked the question, you can give that, knowledge, what you have practiced, what you learned. So that is enough, because he don't know that subject. Nowadays, even though there may be, stuff is available in the Google or, chat GPT, whatever it is, but when your execution part is different, theoretical is different, right? So you will be, that means that is the reason the sustainability in the organization as a fresher or, experienced, that is good opportunity. Okay, so education, no restriction of an education perspective, and age, there is no limitations. Even you are fresher or, experienced or career switchers, you can learn FI CO, there is no constraints. Okay, so what is the FI? Just to recap it, maybe you learned somewhere. So now it is time to learn. Okay. So what is the SAP FI, sir? Anyone can? What is the FI means? Financial accounting. What is that? What it will do? It's a simply everyday, day-to-day business transactions. The transaction can be entered into the system, analysis, sorry, classification, analysis, reporting. Nowadays, people are calling as R2R. What is that R2R? R means record to report. Means when the business transaction is posted in the system or when the transaction is occurred in the business, then that information will be posted in the system, SAP system. Then system will validate the data. System will reclassify the data. System will make it ready the report.
Sir,
So
R
these
to R
functionalities.
means, sir, R to R means it is a end user.
No, even consulting side also we can talk about. Previously it's an FICO we can call it as.
Uh,
Now people also called R2R in after S4 HANA came into picture.
uh,
So even some of the project the people will treat the naming differently. But when people are market when they are talking about SAP FI, yes, it's a financial FICO and even R2R also FICO only. Okay. Business side they are doing business. Their finance department, sales department, whatever the department they have. We will give as a very rare means least transaction access for the end users. Even finance team can do the purchase operations. That's a different thing. That will be controlled through access parameters, not in the module specific. If you talk with business, hey guy, you just check with your finance team. That is in a business language. If you talk about you can check with FICO end user, wrong answer, wrong question. FICO is in a purely it's an identify the resource in consulting layer. But when you talk about something in a finance aspect, you can speak always with business language. What is the business language? Contact your finance team, contact your tax team, contact to your costing team. Okay. So like that way, we need to inform something really. We identified that the user needs to be connected with other person. Okay. R2R and FICO both are same. So this is basically SAP FI is used for reporting either balance sheet means what are the reports we have financial statements like balance sheet, P&L account, cash flow, funds flow, even maybe some more reports. So part of FI it will be happen. It is integrated with other modules. Basically, what is the finance functionality, sir? As per money measurement concept, what money measurement concept is telling us, wherever that monetary transaction is taken place, then that transaction evidence will be reported or entered into the system. Previously means legacy we can call it as other than SAP, it may be handled manually or written somewhere document, whatever the process they are done. But after SAP, then whatever the business transaction which is having monetary, measurable in the money value, then you need to record the transaction in SAP Finance. Any questions are here?
no, no.
Thank you. So it is the SAP FI Finance is integrated with other departments, other modules. So that is material management. Why we need to, you know, consider that material management as an integration point? Because when you are dealing with material means that somewhere you are purchasing. Either it's in a trading business or it's in a manufacturing process you are doing. So the product is purchased somewhere, either in the form of finished good, in terms when you are dealing with a trading business, or if you are purchasing raw material from the source, means from the vendor in the market. So it has some value. When you made a payment, either if you are purchased a cash, okay, then you made a payment, then you received a inventory. That inventory reflects in a balance sheet, right? So balance, it is reflecting in balance sheet means what is the purpose? It contains some value. It is consumed some cost, right? So that will be reflected in balance sheet. So whatever the, so again here one more concept. What is the accrual concept is telling that something you are procured on credit basis, right? So inventory is coming to picture. Inventory coming to your organization. That balance sheet stock got increased. You made it means like you are what we can call it as the warehouse team is taken the material and they stored in the warehouse. So the physical count and it must contain value also that is maintained. So your it is reflecting the value is reflecting your balance sheet as reporting criteria. Then where is that equivalent benefit you recorded? So as per accrual concept, either you are receive you paid a cash or not. If you are paid a cash, then it reduced from cash. It's an only uh, you know uh, changes happens in the balance sheet assets only. When you down that credit purchase, so stock is came into organization that you maintain as a warehouse, then it is reflecting in your balance sheet. That equivalent amount will be maintained as a liability side, that is accounts payable, right? When it comes like that, when the bill is sent to you, so before that, where it is reflects, it's a temporary account that you already aware about, like GRIR account, right? That's a temporary account or zero balance account that you created under liability side. So SD, so you are purchased the raw material or finished good, whatever it is you purchased from the vendor. You made some production, right? When you are dealing with production, there is no financial entry because your raw material already there in the warehouse. That only you consumed in the production process. Then you have a labor, machine, whatever it is. That is already purchased, machinery purchased through capital. That assets are reflected in your balance sheet as asset. But that implies the cost is you are paying as an expenses, right? So here production system there is no accounting postings. But where it is happening in production system, once production is completed, again it will come to warehouse only. Even though you made a expenses from cash for the employee salaries and wages, whatever it is, right? Depreciation also you posted. So those things return from production to warehouse as a finished good. So then the value of inventory is increased. That equivalent value reduced from where? From the raw material, from the expenses, whatever the cash you made per employee salaries. Then when you made a sale, you delivered the inventory to the third party or customer. Then it reduced from your balance sheet inventory. Then where it must be reflected somewhere as per the double entry concept, right? So based on the accrual and double entry system, it will be created a, when you are issue the bill to the customer, it will increase your outstanding accounts receivable. So that is a sales. And the CO means it's like the salaries, wages, whatever it is, the PP production process and controlling module together will generate a document and increase the value in the, what is that, inventory of production. Okay. And what is the CO majorly integrated with? So each and every department treated as a cost center. So whenever you made an expenses, whenever made an expenses, that will be part of controlling. Means the GLs will be integrated with your CO module. This is all about finance. What are the key features? Transaction recording means captures every financial moment, vendor payment, customer receipt, asset purchases, asset depreciations, payrolls, whatever it is. Each and every penny, each and every rupee, each and every paisa that will be recorded. What is the purpose? It supports for IFRS, means International Financial Standards. So gaps, generally accepted accounting principles. GST requirement, like when you are collecting the GST from customer, you are made tax for that vendor. The difference you need to be posted to your government authorities and other regional accounting standards. Compliance means you must be aligned with these standards where you establish your organization, right? So reporting requirement, generate that real time balance sheet, profit and loss account statements, and cash flow reports. These are all majorly used reports. Funds flow also can be used in internal requirement. Comparative statements also we can see. What is the comparative financial statements? Like previous year to current year, previous period to current period. That will be comparative statements. Integration with other modules we just discussed. What are the major submodules are there in FI? Right? These are all submodules. FI GL, General Ledger Account. It's a unique number is assigned, means created for each and every business transaction based on the nature, right? So example like purchase of raw material having a separate GL, vendor liability separate GL. So general ledger account, it's a number, unique number can be created. You are already aware about like that that decimals, number of decimals, maybe up it is allowed up to 10 digits, I think, right? So then account payable. Whenever you procure the material, whenever you purchase the material from the vendor on credit basis, it will be increase. Whenever you made a payment to the vendor, it will reduce automatically based on the reconciliation account that is linked to your general ledger. Each and every layer, if somewhere something it is in a monetary value or measured in a value of the money, then GL will be the base. It integrates with other subcomponents, submodules in the financial accounting. Account receivable, when you made a credit sales to the customer, it's keep on increasing or decreasing based on the payment receipt from the customer, and you are selling the goods on credit basis. It will be the changes, majorly changes is happened in a balance sheet within the assets, right? So inventory reduced means something inventory reduced. Either if you sold on cash, then it reduced the cash. If sold on credit basis, then your account receivable, outstanding account receivable or customer balances will be increased. Asset accounting. So asset accounting majorly what will be happen when you are establish your business, you are procured that capitalize means capital assets. Assets means it will be run in the longer period to generate a profit or business, right? So it is on a carry use cost at the time of purchase. So what will be the treatment every month or every year, the depreciation due to wear and tear and usage of the asset. that will be posted to P&L account. That amount will be, you know, maintained as accumulated. That will be reduced from your asset. Okay. So here also GL will be integrated. Bank, you have a number of banks. ICICI Bank, HDFC Bank, SBI Bank, whatever the banks your organization is handling. Each bank we can call it as a house bank. Each bank again you have multiple accounts because your departments or your dealer or your branch wise, even branch wise also maybe different accounts. Those are all called bank accounts. Whatever the deposits, whatever the withdrawal you are doing, end of the month or end of the day, what are the reconciliation with your passbook and your bank records, right? So that is comes under bank account. Special purpose ledgers means before slide we have discussed what is that gaps compliance report, right? So for following that we have a special purpose ledgers. Either it's on a consolidation purpose or in local requirement purpose. Now in S4HANA we can call extension ledgers. Okay. So what is the controlling? Now come to controlling. What is the controlling? You might be, if you are commerce background, then you might, you know, just to remember your management studies or, graduation. You have seen management accounting, one of the subject, cost accounting, one of the subject, corporate accounting, like these kind of subjects, different subjects, right? Here, you just make, I'll just try to make you understand management accounting and cost accounting, both together will be called as a controlling module. What is the purpose for this module? It's an internal reporting requirement. What is this, sir? Already you mentioned, FI is a reporting requirement. That is legal requirement. External parties, internal or external, whatever the stakeholders, who is looking for that. But this is controlling module purely it's related to management reporting. Why managers is required for this controlling related reports? I want to, see, I have a production capability. Okay, capabilities means I have a setup. So when I'm producing like 100 rupees, something like pen or pencil, whatever, it's a 10 rupees cost. The same, if I asked my third party, any vendor, if it is comes with 5 rupees, then I'll take a decision. Either I can go for a buy or production option, buy or make option. Otherwise, the another layer, I want to control my cost in the organization. So then I can give that budget or planning, budgeting. Then I assign the manager, okay, to control the cost for each element wise, department wise, element wise. What are the elements are here? Something you are mentioned. Element means I am not sure. We are not clear that element. Yes, I'll tell you. Element means for example, power bill is one of the element. Water bill, power bill, stationery. So if you do not have control, if you do not have budget restrictions, then people keep on switch on, fans and everything, 24 by 7. No one will take care of that. If you have restrictions, your manager always keep an eye who is switched on the phone, sorry, fan without people, right? So, like that way means cost control. The another thing is, so the product is there in the market related to organization. Some of the market it's a huge demand is there. Some of the market it is not there. Some of the market segment or whatever the location you not yet entered in that location or segment. So either you can continue the product or you can stop the product based on the demand. Either you can expand or reduce. This kind of different layer analysis will be happened with controlling module. What it will do in real time, it will keep an eye on your expenses and your revenues. The controlling module always keep an eye, means it is not allowing any single paisa without cost object. Something you want to make a payment, whom you are paying, where is working, means the department. Electricity bill from which department, water bill from which department, either they have a budget or not, means each and penny will be considered in reporting perspective. So that is the reason expenses and revenues must be aligned with CO module. The expenses and revenue related GLs must be aligned with CO module. So the GL is the straight away, integration with GL, and from FI side, GL that will be converted to CO module as cost element. That we can discuss further. So any questions are here? So what is the purpose? What the SAP controlling does? Tracks the cost we just discussed. Okay. Analysis. Provide insight into which products, customers or segment are profitable. Supports planning, means how much budget we can next to forecasting budget based on the planning. Variance analysis. What is the standard versus actual? So for example, one product, 10 quantity of raw material is required. If you consumed 11, then you have to analyze why it is additional quantity posted. What is the reason behind that? Why variances came into picture? So that kind of analysis will be happen in CO module. So it is integrated with FI. So these are all major components in CO. Cost element accounting. So here two layers are there. Cost element accounting that we will discuss. That is majorly primary, which is coming from FI. Secondary, which is created for within CO, within controlling module, within controlling requirement. Cost center accounting. We just discuss like each function or a department. We call it as a cost center. Okay. Internal order. The naming itself, internal, means it is not going to reflect your balance sheet. It is purely within the controlling module, which is purely for your management requirement, reporting requirement. So that is the reason it is internal orders. That orders are created for internal purpose to track or collect the cost. Product cost controlling, to calculate the cost of goods manufactured or sold. When you manufacture something, okay, the goods, what are the cost is associated, what are the component are involved, what are the quantity for that particular component. So that kind of analysis. Profitability analysis, product wise analysis, customer wise analysis, market wise analysis, even sales person wise analysis can be happened in the profitability analysis COPA. Yeah. What is the difference between FI and CO? FI is purely external financial reporting. CO is internal management reporting. FI produce balance sheet and P&L account for the compliance requirement. CO, it's a cost reports, profitability analysis for management. FI focus on legal or statutory needs. CO focus on decision making and efficiency. So example we have given. Yeah. This is about SAP, FI, SAP CO, the differences, which is integrated with other modules. Okay. We have a few more slides, but that will be, based on time limit. I can stop here. We'll discuss in the next session. Any question, please feel free to ask.
Sir, in the previous slide, we observed one COPA, COPA, last one, profitability analysis.
Yes,
Just here, the COPA is a complexity in the controlling part.
it's not a complexity. See, if you understand the concept, why we are doing, what we are doing, where we are doing, where it is coming, right? The source
Exactly.
from the data is coming from where. If you have a clarity, it's not a critical.
Uh,
If you do not have a clarity, definitely it's a critical.
exactly.
So that is the reason. See, concept is important. Content is anyhow, it will keep on change project to project. But concept, if you are clear on concept, then it is very easy.
Okay.
Okay.
Okay. Thank you.
Anyone, any questions, please?
No questions.
No questions.
Thank you. So please refer to your colleagues or friends. Okay. So ask them to join. So that will be help you and me. How it can be help to you? Because you people should work, learn together,
Yes.
sharing, your views. Okay. That will be help to you. And for me, definitely it's a monetary benefit. If added one more person, it will be in my revenue is increased, right?
Yes.
Anyhow, thank you. Thank you very much to join the call. Bye for
Thank
now.
you. Thank you.
Thank you, sir. Bye, everyone.